Hi, Bronwyn, can you hear me?
Yes, Wilfred, I can hear you.
Okay, I think we can start recording now.
Okay, I have done so.
Can I just ask you one thing? Where do the students indicate their student numbers?
In the chat.
Okay.
So they must just open their chat. It is in that little toolbar where they mute their microphone and their video. There's a little chat bubble. They can just click on that and then they'll be able to put in their student numbers.
Okay, thank you. I think I'm ready to go.
Okay, and don't forget the evaluation.
Yes, okay, I'll do that.
Thank you. Good luck.
Okay, thanks.
Bye.
Okay, bye. Right, good morning, students. It's 9 o'clock. Let us get going with today's lecture. Just before we go into the lecture, just a few things, guys, to take note of. Number one, you must switch off your microphones and your cameras. I see Bandile has still got his camera on, I think. So that will be appreciated, guys, if you join. Just please switch that off. And then secondly, guys, you will have to indicate your student number. And to indicate your student number in the middle of the screen, if you click on there, you'll see there is a conversation for like a text box. You must just please indicate there your student number in that one. And then today's lecture is a follow-on on the previous lecture. So in order for you to get the notes, I have sent out the notes then also to all the students. So the notes that you should have there, guys, that we are going to work from today is called Lecture 6. If you haven't got that notes, on the My Teams, if you go onto the files there, onto the files, you can see that this file is also uploaded there. Now, next to the file, if you go onto the My Teams, you will see that there is an icon for your evaluation form. So at the end of the lecture, please, guys, we want you to complete the evaluation form since we are quite new onto the online lectures. And we want to see what are the problems that you guys encounter so that we can just give you guys a better service. So remember, guys, you must indicate your student number under the chats. You must complete the evaluation form. You must have the lecture notes, which is called lecture number 6. You must have that available. And at the end of the lecture, we will appreciate it if you just complete the evaluation form. Right, guys, I'm ready to go. Right, guys, in today's lecture, we are going to take a look at our financial statements and how our financial statements will be completed after we have actually just taken into account the additional information. So we are going to take a look at a typical exam question today, and then we will see how we are going to complete this particular question. So if you go to any question on financial statements, guys, they will ask you to complete either the statement of profit and loss and other comprehensive income, or the statement of financial position, or the statement of changes in equity, or a combination of the three financial statements. It comes down, guys, to financial statements, and we have gone through the formats last week over the last lecture, so we are now going to apply that. But when we take a look at a question that will be given to us, they will give you a trial balance. Now, this trial balance is also what we call a pre-adjustment trial balance. So this is a trial balance that will just have the information for the entire financial year. So onto your financial statements. If you now take a look now, and I'm just going back now just to show you what I'm talking about, I am going to page 3 of your notes, which is the October-November 2013 question paper. And in this question paper, you can see there, it's a business called Selepe Traders. And they will give you a pre-adjustment trial balance. So the information that you see in this trial balance is a summary of the transactions for the entire financial year. So during the course of the financial year, these transactions happened and it was recorded in the books of the business. So if you take a look at the sales figure, 732,615 Rand. That means that the total sales for the year has accumulated to 732,615 Rand. So the trial balance is nothing else but a summary of the transactions which has occurred during the course of the financial year. Now, together with the trial balance, you will also get additional information. Now, your additional information, or what we commonly refer to as your adjustments, has not yet been recorded in the books of the business. So, that information must still be recorded in the books. And because we must still record their transactions in the books of the business, your trial balance, after you recorded the adjustments, the amounts in your trial balance will have to change. So our lecture today focuses on all of these different kinds of adjustments that you can get. And remember now, adjustments happens only at the end of the financial year. The adjustments has not yet been recorded in the books of the business. So you must record this now in the books of the business via journal entries, and then when you post it back to the ledger, it will change the amounts in the trial balance. So let us go now, guys, to all of these adjustments, and I'm referring you to your notes now, page 1 of your notes. The first adjustment that we are dealing here with, guys, is the adjustment called accrued expenses. The adjustment called accrued expenses. Now, accrued expenses will occur whenever there is an expense that we didn't pay. For example, it can be that we didn't pay the salary of one of our employees, or we didn't pay the telephone account for the last month of the financial year. So whenever you come across an expense that you didn't pay, you were supposed to pay it, but you didn't pay it at all during the financial year, we call that accrued expenses. Now, how do we deal with accrued expenses? To deal with accrued expenses, we say accrued expenses is listed as a liability. Remember, you are owing somebody money. You didn't pay the salary, or you didn't pay the water and electricity. To record this in the books of the business, you debit the account, the actual expense account you debit, and you credit accrued expenses. So if it is salaries, debit salaries. If it is telephone, debit the telephone account. The impact on your statement of comprehensive income is that your expense will have to increase. By that I mean, if your telephone account in your trial balance shows 20,000 Rand, it means that you have paid 20,000 Rand already. For the year, you have paid 20,000 Rand. But if your adjustment tells you that there's 2,000 Rand of telephone that you didn't pay as yet, that 2,000 Rand is called accrued expenses. So in your trial balance will be 20,000 Rand, your accrued expenses will be 2,000 Rand, So your total expense for the year will then be the 20,000 rand that you have paid, plus another 2,000 that you didn't, that you are still owing. So your expense is actually 22,000 rand. I'm just stressing the point that whenever you work with accrued expenses, the expense in the trial balance is only what you have paid. Now you will get more outstanding amounts, and that expense now, like the 2,000 rand, will mean that when you do the statement of profit and loss and other comprehensive income, you will show the expense as 22,000 rand, which is the 20,000 in the trial balance plus accrued expenses of 2,000. That's our first adjustment. The next adjustment is called prepaid expenses. Next adjustment is called. So we are dealing with prepaid expenses whenever we come across an adjustment where the adjustment will tell you that you have paid an amount of money during this year, but the expense is actually for the next financial year. For instance, example, insurance. Sometimes you pay the January insurance during the month of December. So if your financial year ends on the 31st of December, even though you have actually paid a portion of that money for the next financial year. The impact on our financial statements will, of course, now be, guys, that when you must do your financial statements, you will have to decrease your expense, because in your trial balance, you have paid actually for this year as well as 1 month of the next financial year. So if you want to see what is the actual expense for the current year, you will have to decrease your expenses. We are dealing with prepaid expenses. Prepaid expenses is classified as an asset. To record that in the books of the business, debit prepaid expenses. Remember, assets increase on the debit side. You've got a further expense. You debit your prepaid expenses and you credit your expense accounts. So if it is insurance, credit insurance. If you have paid water and electricity in excess, credit water and electricity. But the impact on the statement of comprehensive income is that you will have to decrease your expense. Right, guys, we move on to our next adjustment. Our next adjustment is the adjustment called accrued income. Now, we will deal with accrued income whenever we have the situation, we deal with accrued income, where the business was supposed to receive money, but it is still outstanding at the end of the year. An example of that would be if we have got a tenant that is supposed to pay us rent, but he did not pay for the month of December, then he is still owing us the rental for the current month. For the current year, there will be 1 month rental that is still due to us. And whenever you come across such an adjustment, that falls under the category of accrued income. Now, accrued income is an asset. Always remember, somebody that's owing you money. It's like a trade receivable. Trade receivable is classified as an asset. So when you deal with accrued income, that falls under the category of assets. To record it in the books of the business, we debit the account accrued income and we credit the income account. So if it is rental that is due to us, debit accrued income, credit your account rent income. If it's interest on fixed deposit, debit accrued income and you credit interest on fixed deposit. The impact on your statement of comprehensive income is that your income accounts, rent income for instance, will have to increase. Because remember now, if a tenant only paid for 11 months, in your trial balance, the amount reflected will only be for 11 months. Now your adjustment tells you that there is still 1 month outstanding. So when you do your financial statements, you will have to show that your income is actually then for the 12 months, which is the amount in the trial balance plus the adjustment. Okay. And when you do your statement of financial position, accrued income will fall under your current assets. The next adjustment, guys, that we deal with is our adjustment called income received in advance. Income received in advance. Income received in advance will occur when you are receiving money for the next financial year. We are receiving it during the current financial year. An example of that would be the following. It could be that if we have got a financial year that ends in December, and the tenant has paid for the entire year, and he also pays for January, he also pays for the next month. It means that during the current financial year, we have then received the rent for 13 months. 1 month in excess, 1 month too much. And that amount of money for that 1 month, we will call that now income received in advance. When we record the income received in advance now, guys, in the books of the business, then income received in advance is classified as a liability. You credit income received in advance, and you will have to debit the income account. The impact on your statement of profit and loss is that the income account will have to decrease. Like the example of rental now, guys, in your trial balance, there will be 13 months worth of rental there. You only want to know what's the rent for the current financial year, and therefore you will have to subtract, decrease the amount of income received in advance from the amount in the trial balance. Okay, guys, we are on to our next adjustment. Your next adjustment is this is where we will have additional credit losses. Additional credit losses. Now, when we speak about, guys, our additional credit losses, you will have the situation that in your trial balance, you will have credit losses. Now, remember, credit losses is the amount of our trade receivables that we have written off during the current financial year. Those are the people that's owing us money, and we can't trace them, and we decide to write off their accounts. If your adjustment tells you that you have now got more credit losses, okay, you will have to write off more of your trade receivables as credit losses. The impact in your trial balance now, guys, is that when you must record this now in the books of the business, debit credit losses, you know you've got a further expense. Expenses increase on the debit side. So you will debit your credit losses account and you credit your trade receivables. Remember, trade receivables, it's the people that's owing us money. You will have to decrease that amount. So when we do our trade receivables now, in your statement of financial position, receivables, guys, is classified as an asset. Your assets will decrease and you will have more expenses. So you increase your credit losses. Okay? So your expense will actually increase. Right, guys. The next adjustment that we are dealing with here, guys, is our adjustment called consumable inventory on hand. Consumable inventory on hand. This will refer to items such as stationery and packing material. So what happens is that at the end of the financial year, you may have stationery still left or packing material still left. So your trial balance may reflect stationery and the stationery purchase, and say now you bought stationery for 1,000 rand. But if you have still got 100 rand of that stationery left, that 100 rand is now called our consumable inventory on hand. So if we now say we have still got inventory on hand, we still got stationery on hand, we debit the account inventory stationery, because inventory is an asset. Debit the asset account, increase your inventory, and your stationery account you will have to decrease, credit stationery. So the impact on your statement of profit and loss is that you will have to decrease your stationery. If it is packing material, decrease your packing material. Back to my example. If your trial balance, say, stationery purchase is 1,000 rand, and you have still got stationery on hand at the end of the year of 100 rand, then your actual expense is 1,000 minus 100, which means that you have only consumed, you have only used up 900 rand of your stationery. And therefore, when you do your statement of profit and loss and other comprehensive income, you will show your stationery expense as 900 rand. Okay. Right, guys, back to our last adjustment. Our last adjustment deals with depreciation. Now, guys, we are going to do some calculations here on depreciation so that I can show you how to calculate the depreciation amount. But when we speak about depreciation, when we refer to and speak about depreciation, remember now that depreciation is an expense to the business, and it is the value in which our non-current assets will decrease over a period of time due to wear and tear. That is the definition of your depreciation. For instance, if you bought a vehicle for 500,000 rand, and that the value of that vehicle at the end of the financial year, or it has now decreased from 500,000 and the new value is now 450,000, then the value of the vehicle has decreased by 50,000 rand. And that 50,000 rand is what we refer to as the depreciation expense for the year. So guys, let me take you back now to our notes at the bottom of page 2 when we speak about depreciation. Remember depreciation? Depreciation is the amount in which our asset will decrease over a period of time due to wear and tear. Now, to calculate depreciation, guys, there are two methods in which we can calculate your depreciation. You get a method that is called the cost price method, or sometimes also referred to as the straight line method. And in that method, guys, what we do is we take a percentage on the cost price. The second method is called the reducing balance method or diminishing balance method. In this method, you must first calculate the diminishing balance or the carrying value. And once you've got the carrying value, you take a percentage of that amount. I will explain these two methods and show you the calculations just now. So you must know how to calculate depreciation. The next thing that you must understand is that you must know how to record the entry in the journal. So now we will say that depreciation is an expense. We will have more expenses. Expenses increase on the debit side. You debit your depreciation account and you credit your account accumulated depreciation. Now, accumulated depreciation refers to the sum of all the depreciations. Accumulated depreciation is all the depreciations over the period added together. That is called accumulated depreciation. So guys, I'm going to explain this now, the journal entry and the calculation, by referring to the example that you have got there. So now I say the following information was taken from the books of VW Traders on the 28th of February 2019 and the 28th of February 2019. That was the last day of the financial year. So our non-current assets, we have got buildings of 480,000, equipment of 126,000, and vehicles of 320,000. At cost, you can see there the vehicles is indicated at cost. That means that we purchased, we bought the stuff for 320,000. Then we have got two accounts here: accumulated depreciation on equipment, 42,000 Rand, and accumulated depreciation on vehicles, 81,500. Accumulated depreciation is the sum of all the depreciations. That means that prior to the 1st of March 2018, we have written off already 42,000 Rand. Depreciation has been written off. For the period that we had the equipment, we have written off already 42,000 Rand. And vehicles, 81,500 has been written off already. There are two adjustments. Adjustment number one, they tell you that you must provide for depreciation, and you must provide for depreciation at 10% per annum on the reducing balance method. And you must provide for depreciation on vehicles at 20% per annum on the cost price. Okay, so guys, I'm going to do the calculations for you now to show you now what is our depreciation amount. I'm firstly going to calculate now the depreciation on my equipment. My adjustment tells me that the depreciation on equipment must be calculated at 10% per annum on the reducing balance method. Remember reducing balance method? Some questions will refer to that also as your diminishing balance method or carrying value method. If you want to calculate the depreciation on an asset using the reducing balance method, you must first calculate what is the carrying value of that asset. And the carrying value of an asset is equal to the cost price of the asset minus the accumulated depreciation. It's the cost price, what you have paid for the asset, minus what you have written off already. So go to equipment, and the cost price of equipment is 126,000, as indicated in the trial balance. Accumulated depreciation on equipment is 42,000 Rand, also indicated in your trial balance, which means that our carrying value at this point in time is 84,000 Rand. We are busy with the diminishing balance method. With the diminishing balance method, you must first calculate what is the carrying value. Now we can calculate depreciation. And depreciation is then, go to the rate, 10% per annum. So you take 10% times the carrying value, which is 84,000 Rand, and that will give you a depreciation expense, guys. And your depreciation on your equipment, you have calculated now as 8,400 Rand. That is your depreciation expense for the year. So when the adjustment speaks about the reducing balance method or the diminishing balance method, sometimes they call it a carrying value method. First, calculate the carrying value. Now, what is carrying value? Carrying value is cost minus accumulated depreciation. In my example, 126,000 minus 42,000, which is 84,000. Now we can calculate the depreciation amount. To get the depreciation amount, take the carrying value and take then the percentage given on that, and you will calculate your depreciation to be 8,400. I'm going to calculate now the depreciation on vehicles now. The depreciation on vehicles, according to our adjustment, it must be calculated at 20% per annum, but on the cost price. This is the cost price method, or straight line method. They are also calling this sometimes in your question papers. So you go to the cost price of the vehicle, and the cost price of the vehicle is 320,000 Rand. And you take 20% of that amount. So your depreciation on your vehicles will therefore be the amount of 64,000 Rand. Straight line method, guys, or cost price method, take the percentage and you apply it now to the cost price of the asset. If I must now do the journal entry for this now, I will say, I debit my account, depreciation. Depreciation is an expense. I debit my account, depreciation. And my depreciation expense for the year is 8,400. That was the depreciation on my equipment, plus 64,000 Rand being the depreciation on my vehicles. And I will debit my depreciation today. I will debit my I debit my depreciation account and the amount. Is there somebody joining us? Just a reminder, students, if you are joining us, please just mute your phone, your microphone. Right, we continue, guys. Debit your depreciation. So your depreciation expense is now 72,400 Rand. I credit my account, accumulated depreciation on equipment, and my accumulated depreciation on equipment, I credit. My accumulated depreciation on equipment increases by 8,400 Rand, and I also credit my account, accumulated depreciation on vehicles, and that account I credit with the amount of 64,000. So that is the journal entry, guys, to record our depreciation. And here on top here, I have showed you the actual calculation of the depreciation.
Hello, can I say something?
Right, guys, all clear up to that stage? We are continuing now, guys. That is the end of all our adjustments. So after we've done all our adjustments now, guys.
Sorry, good morning. I couldn't see the other screen since from depreciation.
from the depreciation onwards? You couldn't see it?
Nothing at all.
Nothing at all. Okay, let us just see again here, guys, quickly.
Hello, sir.
Yeah.
Okay, I'm right. Okay now.
Are you all good? Okay, I'm just going to show that screen again for those of you guys that didn't see that. That was the calculation of the depreciation. To calculate the depreciation on equipment, remember your adjustment is telling you that it must be calculated. Go to your adjustment. 10% per annum on the reducing balance method. Reducing balance method means first get your carrying value. Carrying value is cost minus accumulated depreciation. Go to your trial balance for equipment. Your cost is 126,000. Accumulated depreciation is 42,000. 126 minus 42 is 84,000. Take your 10% on that amount and your depreciation is 8,400. That is the depreciation on your equipment. Your adjustment tells you that the vehicles must be depreciated at 20% per annum on the cost price. Cost price, or sometimes called the straight line method, take 20% of that amount, 20% of 320,000, and that will give you depreciation of 64,000 Rand. To record that into the books of the business, debit your depreciation. Your depreciation expense is now 72,400, which is the 8,400 plus the 64,000. You credit accumulated depreciation on equipment, 8,400, and you credit accumulated depreciation on vehicles, 64,000 Rand. Right, guys? That will take care of all our adjustments now. We're going to apply this now, guys, to the question that you will see in your notes.
Hello, sir.
Yes.
Just to interrupt a little bit, I just want to confirm the page number on the study guide because I recently joined the session.
We are not working from the study guide. You must have notes, which is marked as lecture 6, notes for lecture 6. Okay. Right, guys.
Okay, thank you.
Okay, we are on page, in your notes now, guys, we are on page 3. And on page 3, guys, let's just quickly do that now. Right, guys, all of you got the notes there, guys. We take a look at the notes then, guys, on page 3. Now, on page 3, guys, it is a question paper. And in your question paper there, guys, right, guys, I am on to, it is the October-November 2013 question paper that is given to you there, guys, and they give you a trial balance there of Salepe Traders. Now, in the trial balance, guys, if you take a look at the trial balance, remember the trial balance is a summary of the transactions that has happened during the course of the year. Your trial balance consists also, guys, as you can see, we've got 2 sections. The first section, from capital up until allowance for credit losses. Those are what we call our financial position accounts. In that section, you're going to get all your equity accounts, all your assets, and all your liabilities. So, capital and drawings, you will recall, is equity. Mortgage, which is a loan, is a liability. Land and buildings, vehicles, equipment, accumulated depreciation, those are all my non-current assets. Inventory and trade receivables and bank and petty cash, that will fall under my current assets. Creditors control, which is my trade payables, and SARS for, SARS has got a debit balance. So trade receivables control is a liability, and SARS and allowance for credit losses will fall under the category of assets. That is the first section, which is our financial position account section. The second section at the bottom of the trial balance, from sales right down to water and electricity, those are all my nominal accounts. All the income and all of my expenses are listed here in this section. So when you do the statement of profit and loss and other comprehensive income, you only work with your income and your expenses, so you only work with your nominal accounts. When the question asks you, do the statement of financial position, then you must show only your financial position accounts. The assets, the equity, the liabilities, you are going to work with that. Right. So, back to our question. What is your approach to the question? Your approach to the question, guys, is that you always go to your required, which is at the end of the question, so that you can see what you are supposed to do. So go to your page 4 now. And on page 4, they tell you 4.1, you must show the cost of sales calculation. And then under 4.2, they ask you, prepare the statement of profit and loss and other comprehensive income. So now we know what we are supposed to do. So the question wants you to do a statement of profit and loss and other comprehensive income. Therefore, it's a financial statement. And for a financial statement, you know that the format is of the utmost importance. So you must be able to know the format of that statement. The process that we are going to follow is, we're going to start with the adjustments. We're going to work through the adjustments. We are going to bring about the changes in the trial balance, because remember, adjustments and additional information has not yet been recorded in the books of the business. So we must record that, update the trial balance, and once we have updated the trial balance, we've got the final totals now in the trial balance, and from that totals, we can now then complete the financial statements. So that is our approach now to the question. Okay, guys. So I am going to work through each of the adjustments, and then I'm going to show you how to change the amounts then on the trial balance. Adjustment number 1. In the first adjustment, guys, at the bottom then of page 3, they tell you that the levy traders is a sole trader and it uses the periodic inventory system. Now that is not an adjustment as such. That is only information. That is only telling you that when you do the financial statements, that this is a type of business that uses the periodic inventory system. So you know there are 2 stock systems, the perpetual system and the periodic inventory system. And you must know how to do the financial statements. Only the statement of profit and loss and other comprehensive income. That's the only statement that changes between the 2 stock systems. So that is just information. Right, guys, I am on to number 2 now, adjustment number 2. In adjustment number 2, the adjustment tells me inventories on hand on the 31st of January, according to the physical inventory count, is we have got merchandise stock at the end of the financial year, 185,000. And that 185,000, guys, is what is called the closing inventory. You know, when we must do our cost of sales calculation, you still remember that story about cost of sales? Cost of sales is equal to the opening inventory plus the purchases plus all the other expenses that you may incur in getting the stock to you, like carriage on purchases or railage on purchases or freight on purchases. All of those expenses minus the closing inventory. So now in your second adjustment, they give you the amount of closing inventory. Also, they tell you that we have got 8,300 Rand of consumable stores still on hand. So back to your trial balance now. I'm going to update my trial balance now. My consumable stores. Consumable stores is 16,000 Rand. That means that during the course of the financial year, I bought consumable stores for 16,000 Rand. But my adjustment is telling me that there is still 8,300 Rand left. So to update my trial balance, when I'm going to do my financial statements, my consumable stores expense is not 16,000, but I will have to decrease it by 8,300 Rand. So on your trial balance, guys, you show that. And then the other account affected, remember, for each adjustment, there will be two accounts affected. Our other account affected here will be called inventory. Consumable stores, and 8,300 Rand is the asset that you must show. Okay, guys, all clear on that adjustment? It's at the end of the financial year. I've still got consumable stores left at the end of the year. Remember now, an adjustment will always change something in the trial balance, in your financial position accounts, and also something in your nominal accounts. The two accounts affected in this adjustment is inventory. Inventory of consumable stores and our consumable stores account. I acknowledge the fact that I've got an asset now called inventory, consumable stores, and in my trial balance, when I'm going to do my statement of profit and loss and other comprehensive income, I will have to decrease my amount of consumable stores. Okay, guys, I am on to my third adjustment now. Adjustment number 3. Felipe traders determined that the allowance for credit losses should amount to 8,500 Rand. Now, whenever you work with allowance for credit losses, the two accounts involved is credit losses is one account, and the other account is your allowance for credit losses. Back to your trial balance now. Your allowance for credit losses, which is a financial position account, as you guys can see there, it has got a balance of 7,300. We want that balance to be 8,500 Rand. So your allowance for credit losses must actually increase. Allowance for credit losses, you will have to increase that amount by a further 1,200 Rand. Meaning now that you have got a further expense for credit losses of 1,200 Rand. You haven't got a credit losses account in your list of accounts. So we are going to add now in our nominal accounts. We just add here. We've got a further account called credit losses, and that credit losses is 1,200. Okay, all clear on that adjustment, guys? Adjustment number 3, we will have to increase our allowance for credit losses. And if you increase your allowance for credit losses, your credit loss account, your allowance for credit losses increased by 1,200, and you will have a further expense there, guys, of 1,200 rand. Okay. I'm on to adjustment number 4 now, guys. The 4th adjustment there. Adjustment number 4, they tell you that the credit losses that must be written off during the year is 1,500. Now, if you must write off the account of some of your debtors, some of your trade receivables, the 2 accounts affected will be credit losses and your trade receivables. Remember, you don't have that people that's owing you the money anymore. So you debit your credit losses now, and the amount is 1,500. And you will have to decrease your write-off, your debtors. 1,500 of your trade receivables must be written off. Show that now, guys, on your trial balance. So on your trial balance now, my trade receivables or debtors control. Remember now, in the question paper, it will still be called debtors control because this is quite an old question paper, 2013, as you can see there. But when you are going to write your exams now, guys, they will call it trade receivables control. Okay, just remember that. And our trade receivables owes us 115,450. However, we have now got information that we must write off 1,500 rand of our trade receivables. So your trade receivables must decrease by 1,500. And the other account involved here is credit losses. So we have got more credit losses, another 1,500 rand of the debtors must be written off. So your credit losses will now be the 1,200 from adjustment number 3, and from adjustment number 4, there is a further 1,500 rand. Okay. Right, guys, remember your approach is now, you first work through all your adjustments, see what adjustment you are dealing with, and to bring about the changes now in your trial balance. I'm on to adjustment number 5. Adjustment number 5 tells you that Celepe traders paid 9,000 rand for insurance on the 1st of August. And this was for a period of 18 months. So we paid for 18 months. So you take the 9,000 rand, divide that now by 18 months, and then you will see that you are actually paying, take the 9,000 rand, divided it by 18 months, and you actually pay 500 rand per month. But you paid it on the 1st of August in the year 2012. So you paid for August, you paid for September, you paid for October, you paid for November, you paid for December, you paid for January and February, and you also paid for March, and you paid for April, and you paid for May, and you paid for June, and you also paid for July, and that is the end of the financial year. So you paid for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 months. You have paid for 12 months because your financial year started on the 1st of August 2012 and ends on the 31st of July 2013. So you paid for 12 months of this year, and you also paid for 6 months of the next financial year. So your prepaid expenses is actually for 6 months. You are paying 500 Rand per month. Paid expenses is actually the amount of 3,000 Rand. So 3,000 Rand, 6 months you've paid extra, and that is classified as prepaid expenses. To record this now in the books of the business, we are going to work with an account called prepaid expenses. And prepaid expenses is an asset that is debited 3,000 Rand. And you will have to credit your insurance account with the amount of 3,000 Rand. That is the calculation then of the prepaid expenses. To show the impact on our trial balance now, go to your account, insurance, and that 9,000 Rand that you have paid there was, remember, for 18 months. So to update your trial balance now, we will now say that your expense will have to decrease by 3,000 Rand. And the other account involved is a financial position account. Your financial position account is called prepaid expenses. And we will have prepaid expenses of 3,000 Rand. Okay, remember this is what I've got here at the bottom is for the accounts that is not in the trial balance. We've got financial position accounts that must be added to our other financial position accounts and nominal accounts. Besides these nominal accounts, we will also have nominal accounts from our adjustments. So guys, we are continuing with this now. Remember that adjustment was the adjustment that dealt with prepaid expenses and insurance. The next adjustment, guys, adjustment number 6. Adjustment number 6. The total amount of rental income received amounted to 21,450 Rand for the year. And the tenant is charged 1,650 per month. If we charge the tenant 1,650 per month, we are supposed to receive 1,650 times 12 for the 12-month period. You take 1,650 multiplied by 12, and you will see that we are supposed to receive 19,800 Rand. That is the amount of money that we are supposed to receive. However, the tenant paid 21,450. So the tenant paid minus 21,450. The tenant paid 1,650 Rand too much. He paid 1,650 Rand extra. That 1,650 that he paid extra, we call that income received in advance. He received too much money. Income received in advance. And the income received in advance, 1 month extra, that is 1,650. Go back to your trial balance now. And your rental income that you will see there, that rent income, the 21,450 was actually too much. So we will say minus 1,650 to get the actual amount for this year. And we are working with a financial position account called income received in advance, which is a liability, and the amount is 1,650. Okay, guys, we are still busy with adjustments. Remember, with adjustments, there are two accounts involved. We must always indicate the two accounts that is involved. In this example now, we have established that the tenant has paid too much rent, and that was classified as income received in advance. Income received in advance, and your income received in advance, 1 month too much, and that is 1,650. Right, guys, I'm on to adjustment number 7. And adjustment number 7 deals with depreciation. They ask you to calculate the depreciation, 20% per annum on the diminishing balance method. Now remember, we've gone through an example of this now. You apply the same stuff, guys. So, if the adjustment asks you to do it on the diminishing balance method, you must first calculate what is the carrying value of the asset. Now, when we speak about carrying value is the cost price of the asset minus accumulated depreciation. That is the carrying value. So go to the question, go to your adjustment, and you will see, as far as vehicles is concerned, the cost price of vehicles is 145,000 Rand, and the accumulated depreciation on vehicles is 29,000 Rand. So back to our calculation now. The cost price of our vehicle is equal to 145,000 Rand. Minus accumulated depreciation on vehicles, which is 29,000 Rand. So my carrying amount or my carrying value is then 145,000 minus 29,000, and that will give me 116,000 Rand. Remember, with the carrying value method or diminishing balance method, first calculate the carrying value. So to calculate the depreciation now, it will be equal to the 116,000 Rand. Take 20% of that amount. That means now that our depreciation is now the amount of 23,200 Rand. Depreciation, 23,200 Rand. Update your trial balance. I've got a new account under my nominal accounts now. This account is called depreciation. And my depreciation that I have calculated now is 23,200, but that was just the depreciation vehicles. Back now to your depreciation on equipment. And your depreciation on equipment must be calculated at 20% per annum on the straight line method. Straight line method, guys, is also referred to as the cost price method. So for equipment, go to the cost price of equipment in your trial balance. Your equipment at cost is the amount of 85,000 Rand. Back to your equipment. Equipment at cost is 85,000 Rand. So we are working on the straight line method. So the straight line method is the cost price method. To calculate your depreciation, we say that depreciation is equal to the 85,500, which is the cost price, times 20%. And that will give you depreciation of 17,000 Rand. So your depreciation amount there, guys, is the amount of 17,000 Rand. Back to your trial balance now, just update that now. Your depreciation, there's now a further 17,000 Rand of depreciation. Your accumulated depreciation. Accumulated depreciation
Hello,
on vehicles.
Hello, sir.
Yes.
The cost price of equipment is 85,000, not 85,500. If you can see, you did a mistake somewhere.
Thank you. Thank you very much. But your calculation is still 17,000, I think. Okay. Okay, let me just quickly change that. 85,000. Yeah, it is 85,000. Thank you for that. 85,000 and 85,000. Your answer is still 17,000. I just made a typo there. It's 17,000 Rand. Go back now, guys, to my trial balance now. I have updated my depreciation. I must update now my accumulated depreciation. Accumulated depreciation on vehicles must increase now by the amount of 23,200, and my accumulated depreciation on equipment must increase with another 17,000 Rand. Okay, thank you for that, guys. That will take care of adjustment number 7. Depreciation, guys, on vehicles, you must get 23,200, and the depreciation on equipment, that is 17,000. Okay. Almost done, guys. We are on to our last adjustment now, which is adjustment number 8. In adjustment number 8, the water and electricity account of 2,756 for July was paid during August. Now, August 2013 is in the new financial year. So there was an expense. It is the July expense, but we only paid it in August. We only paid it in the new financial year. So this is an expense that we did not pay. And if you come across an expense that you didn't pay for the current financial year, you call that accrued expenses. So we are dealing here now, guys, with accrued expenses. So the accounts affected will be accrued expenses. Account is now water and electricity. So there is water and electricity that we did not pay at all. So we go back to our trial balance now. We update our trial balance. We are working with a financial position account called accrued expenses, classified as a liability. And your accrued expenses now, guys, is the amount of 2,756. Accrued expenses will be affected. Your other account affected here, guys, would be water and electricity. Your water and electricity, the 28,730, That is what you have only paid for the year. But now, through your adjustment, you have established that you must still pay a further amount of 2,785 rand. And sorry, 2,756 rand. That is a further expense for this year. So your water and electricity account will increase. Okay, guys, that will take care now of all our adjustments. We've taken into account all our adjustments. We brought about all the changes now to our trial balance now, and now we are now ready to do our financial statements. Back to the question. Back to the question, guys. And in this question now, guys, they ask you, first of all, under 4.1, show the cost of sales calculation. So I'm now going to take all the information into account, and I am going to show the cost of sales calculation. Now you must know the story here, guys, to calculate the cost of sales. To calculate cost of sales is equal to the opening inventory and from your trial balance, guys, your opening inventory is the amount of 125,000 rand. Plus your purchases. You must know this song, guys. Cost of sales, opening inventory plus purchases, plus any cost that we incur to get the stock, minus your closing inventory. So your purchases, guys, we are looking for net purchases. Net purchases is equal to your purchases minus your purchases returns minus settlement discount received. Remember that now from last week, guys, when we have done the financial statements. So your purchases is the amount of 365,000. We have got settlement discount received of 5,210 rand. Subtract that. And that will give you guys net purchases. And your net purchases is the amount of 359,790. And now all the costs that you have incurred in getting the stock to you, you will see that we have got freight on purchases. And the freight on purchases there, guys, is an amount of 45,000 rand. We have got import tariffs. Sometimes they are also calling this import duties. The import tariffs is 9,300 rand. These are all costs that we have incurred, guys, in getting the stock to us. Okay, it will increase the cost price of the item. Just take a look at purchases, for instance. If you buy something in the United States for 50,000 rand, but you must actually pay 5,000 rand to import it. The item is 50,000, you pay 5,000 to import it, so the actual cost of the item is therefore 55,000. So the import tariffs is added onto the cost of your purchases. Right. Then you will see, guys, that there's also customs duties. And your customs duties is added onto that. And in this exercise, guys, there's quite a few additional expenses that you will have. 6,750. Minus your closing inventory, and your closing inventory is 185,000 Rand. Remember now, our closing inventory, guys, was given to you under adjustment number 2. And that is the calculation for your cost of sales. So if you want to calculate your cost of sales, guys, your cost of sales is then equal to opening inventory plus the purchases plus all the costs that you will incur in getting the stock to you. In this case, guys, it was freight on purchases, import tariffs, customs duties, all of that. In most of the other questions, you will only get like carriage on purchases, right? Minus your closing inventory, guys. And your answer that you will get there for your cost of sales is 360,840. 360,840, guys, and that is the value.
Sorry, sir, we can't see anything on the screen.
You can't see. Okay. Can you see now?
Your face. Oh.
You see my face? You don't want to see my face. Can you guys see now? Is it clear now? Right, guys. So when we talk about the first part of the question paper, they ask you to complete the calculation for cost of sales. Cost of sales is the opening inventory plus the purchases plus the freight on purchases plus import tariffs and customs duties minus the closing inventory, and that will give you cost of sales of 360,840. Calculation of the cost of sales. Okay, that part of the question paper counted 7 marks. Remember, for purchases, we are looking for net purchases. Net purchases is equal to purchases minus purchases returns minus settlement discount received. In this question, there was no purchases returns. Therefore, net purchases was purchases minus settlement discount received. Okay, guys, I'm moving on to the second part of the question. And the second part, guys, of the question, they want you to do the statement of profit and loss and other comprehensive income. So guys, if you want to do now the statement of profit and loss and other comprehensive income, remember, format is of the utmost importance here. So you must know the format. So the information that we're going to work with is that we will have the totals now in the trial balance. But remember, the totals in the trial balance, we must now work with the adjusted amounts. The amounts after you have taken into account all the adjustments. Right, let me go to that now, guys, quickly. So, in your statement of profit and loss and other comprehensive income, you're going to start with your revenue, which is your sales amount. And your sales amount is 732,615 minus 35,415 which is your sales return. Then we have settlement discount granted. Subtract your settlement discount granted of 3,300. And your net sales is the amount of 693,900. Remember now, guys, the sales, the revenue amount is sales minus sales returns minus your settlement discount granted. The cost of sales, guys, remember now, the cost of sales was calculated in the first part of the question. So you can just bring that amount down there. That is the amount of cost of sales. Show it now in brackets now because it must be subtracted. And your amount of the gross profit is 333,060. Gross profit is equal to revenue minus your cost of sales. Now for a periodic inventory system, guys, your cost of sales, you normally have to show in here the cost of sales calculation. But this was a type of question where they ask you separately to do the cost of sales calculation. So now all of that has been asked already, so you can just copy that amount right down as your cost of sales. So your revenue minus your cost of sales, that is therefore your gross profit. Right, guys, back to our format now. And we will now bring into account our other income. Our other income, remember now, the amount in the trial balance was 21,450. But 1,650, if you can recall, we have to update our trial balance with that amount, because 1,650 was the income received in advance. And your rental income, therefore, is the amount of 19,800. Other income that we do have, we've got interest on fixed deposit. And your interest on fixed deposit is 3,410 from the trial balance. There was no adjustment. We've also got an income account there called profit on sale of asset. And the profit on sale of the asset there, guys, was an amount of 15,500. And we have got another income account there, guys, that is called credit losses recovered. Credit losses recovered, that is an income account, and that amounted to 9,300 Rand. Remember, credit losses recovered has got absolutely nothing to do with your credit losses. It's a separate account, guys, and that is an income account. So we block all of that. All our income accounts we block. And that will give you income there, guys, of 48,010. So my income is rent income. Adjusted amount is now 19,800. Interest on fixed deposit, profit on sale of an asset, and credit losses recovered. We go now, guys, to our distribution, administrative, and other expenses. Distribution, administrative, and other expenses. I've got salaries, straight from the trial balance, 225,000. I've got adverts from the trial balance. My expense for adverts is 12,300. I've got motor expenses. My motor expenses is the amount of 18,945. I've got consumable stores. But now remember, consumable stores had an adjustment involved. So when there is any adjustment, guys, you need to show the calculations. Remember, in all accounting questions, you must always show your calculations. So my consumable stores, guys, even though I paid 16,000 Rand for my consumable stores, I also had consumable stores, guys, on hand at the end of the year of 8,300 Rand was still on hand at the end of the year. and therefore my expense for consumable stores that you will show in your statement of profit and loss and other comprehensive income is only 7,700 Rand. My telephone expenses hasn't changed. There was no adjustment. 19,600 Rand. Okay. My next expense is my insurance expense. And with insurance, guys, there was an adjustment involved with insurance. Remember, we had to change that amount. 9,000 Rand is the amount in the trial balance, but we have calculated that there was 3,000 Rand of prepaid expenses. So your actual expense for insurance, guys, must just be 6,000 Rand. My next expense is water and electricity. And with water and electricity, there was also an adjustment involved. My expense for water and electricity, guys, let's see, is that 27,830. There was accrued expenses, if you guys can recall that one. And there was further expenses of...
Yeah. My page seems to be stuck. I'm not seeing anything.
Okay. Is there anybody else also not seeing anything? Can somebody just answer for me? Can you guys see that?
Yes, we can see.
Okay. If you have got a technical problem, please, guys, just send something there to that CNT email address, and they will be able to sort it out. But unfortunately, I must continue. I cannot deal with any technical issues now. Right. So the water and electricity account, guys, 27,830 plus 2,756 means that my expense for water and electricity is now 30,586. Okay. Besides the amounts in the trial balance, remember we've got additional information also, additional accounts that we had to add on, more expenses and credit losses. Remember, there was 1,500 that was written off, plus another 1,200 from the increase of your allowance, resulting in credit losses expense now of 2,700. Depreciation, we have worked out the calculation there. The depreciation is 17,000 plus the depreciation on vehicles. And the depreciation on vehicles was 23,200 Rand. And that will give you a depreciation expense of 40,200 Rand. Okay. Then we have also got an expense here, guys, that we will show under your finance costs. And that was the expense for interest on mortgage. We've got an interest on mortgage expense of 28,750. 28,750. Right. Just to block that, guys, our distribution, administrative, and other expenses, we will block that. We will add up all of that. It's the 225,000 plus the 12,300 plus 18,945 plus 7,700 plus 19,600 plus the 6,000 of insurance and the 30,586 Rand of water and electricity. Your credit losses is 2,700 and your depreciation is 40,200, giving you distribution, administrative, and other expenses 363,031. 363,031 Rand. Your finance cost, we just block that. It's the only amount there of 28,750. So you take your gross profit of 333,060 plus your other income of 48,010 minus your distribution, administrative and other expenses of 363,031 minus your finance cost of 28,750, and you will see that you will now have a negative amount of 10,711. The negative amount you put in brackets. You label that now as, of course, the amount is negative. This is the net loss for the year. Other comprehensive income is always zero, guys. So we will have a total comprehensive loss for the year. And the loss for the year is that 10,711. 10,711. Right, guys. Okay, guys, that will be the solution then to that question. Right, guys, we are at the end of our session. Let us just quickly summarize what we have covered today. So in today's lecture, guys, we've gone over the adjustments and how the adjustments will impact on our financial statements. This is quite an important section, guys, of your syllabus. So make sure that you can handle all of the financial statements, which I have covered in the previous lecture. And then today we look at the adjustments as well as the statement of profit and loss and other comprehensive income. There is another question, guys, that is also on your notes. Please try that question. And then I will also then, before I send you now the new set of notes for next week's lecture, I will then also give you the solution of today's lectures as well. So guys, please, in the course of this week, please try, if you can, do the other question, which was the homework question. See if you can do that. And when you get the solution, compare it then against that one. Remember, guys, you can only be successful if you practice these things all the time. And just then in closing, guys, please remember just to have added your student number under the chats now. And then if you go back onto the mainframe, you will see that next to files, guys, next to file, there is an icon then for your evaluation. And I really would want to see, guys, what you say in your evaluation. Add in, please, if you've got any more information. And that will then take care, guys, of my lecture for today. I hope that you guys enjoyed it. And our next lecture then for FAC1501 is next week, Wednesday then. Okay, good morning, bye. I've got one question, yes?
Sorry to bother. Where did you, this paper that you used now, which exam paper was that?
The question that we worked through now was the, let me see, I have mentioned it. It's October, November 2013.
Okay. And then just one last question. Where do we get these notes beforehand? Because I don't think I'm getting any notifications on them to get the stuff beforehand, before the online class.
Okay. Can you see the screen now?
Yes.
If you go, can you see it? Guys, for the people that is not getting the notes, I'm sure that this is now the 1,010,000th time that I put this up, but I'm going to put it up again, guys. You need to send me an email and send the email to FAC1501 S1. S1 means semester 1 of 2020 at gmail.com, so that you can get the notes then and the solutions of today's lecture And the notes for next week's lecture, you will get that if you email me on that one. Most of the students has got that, but we still get requests every week of people looking for these notes.
Okay, thank you so
Okay,
much, sir.
and can I just answer that question again? If you go to the Teams, and you will go onto File, and you will see that the notes is also listed there under Files. You will also get it there. Okay.
Thank you,
Right, guys.
sir.
Okay, guys, that concludes my session then for today. And hope you guys enjoy the rest of the day then. Okay, bye.
Students, I will put a link in the chat now for quick access to the files for the session.
Thanks, Bronwyn.